Hello everyone, I am Black Jeff for Forex, and tonight I'll be talking on directional bias. Right now, a lot of people get confused when they hear directional bias. Now, first thing first is um, a particular method started this word directional bias, and a lot of people started losing confidence in themselves. They started losing confidence in their analysis. Now, this is wrong. Now, no matter who the person is, no matter who a mentor is, I'm not saying you should disrespect mentors. I'm just saying that no matter who the person is, no matter who a mentor is, right, you should not lose confidence in yourself. Now, we all know the biggest forex trader in Nigeria. I'm not going to call names in this video. We all know the biggest forex trader in Nigeria is Black Jeff for Forex. Yes. Now, the person has my name in his name is Black Jeff. All right. Now, if this particular person is buying GBP USD, for example, now, and my own analysis is telling me sell GBP USD, I will follow my analysis. Forget the fact that this guy has a Lamborghini. Forget the fact that this guy has so many people. I will follow my analysis. Now, one thing you should know is do not allow your 3 months of backtesting just waste because somebody just say this is this. See, even we Christians, yeah, Christians, Muslims go through challenges, right? We go through what's it called? We go through challenges. It is the preparation you've made before time that will determine if you'll be able to stand in the time of this challenge. And the Bible says something. It said if you fall in the day of battle, it means your strength is small. That means you've not been preparing before time, right? He said if you fail or if you fall in the day of battle, it means your strength is small. Now, you've been backtesting, right? You've been backtesting and you've been backtesting and you've been backtesting and you've been backtesting, you've been backtesting. Now, you will not allow one grammar to now confuse you for what you've been doing. Now, directional bias is very, very simple because I get a lot of DMs. A lot of persons come to my DM saying that this person has been shouting directional bias in a Telegram channel, and what's it called? What is directional bias? Directional bias is something you already know from the name. Just let's break it down. Directional. Let's break that direction down. That directional down. We have direction, right? Right. Then bias. That is okay. What is the direction of this market? That's simply the definition of directional bias. You hear somebody say something like directional bias plus key level. A lot of you know key level, but what is now confusing you now is not the directional bias. And it is very simple. Now, I am telling you now that Black Jeff is saying that directional bias is simply talking about the direction of the market. That is the recent direction of the market. That is the current direction of the market. Now, what do I mean by the recent direction of the market? What do I mean by the current direction of the market? You must understand that there are three types of market direction. Three types. We have the downtrend, we have the uptrend, and we have the sideways trend. Right now, from the basics of forex, we have been told that whenever the market is moving sideways, it means that the market is choppy. It means the market is consolidating, and you do not want to trade a consolidating market, right? You do not want to trade a consolidating market. You do not want to trade a consolidating market. You want to trade when the market is trending. Now, that's why you hear follow the trend, follow the trend, follow the trend. Now, I'm going to explain this now with directional bias. Now, for those of us, right, If you look at our fathers, if you look at some of our fathers here back then, you will see that, okay, I don't know if I don't know how many of you here view my status. You will see that I am always wearing this three-quarter and senator. I am always on senators. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Every day I wear senators every day. Now, if you look at the pattern of the senator I am wearing currently, you will see that this pattern of senator is what is trending right now. There was a time this guy was trending. This senator was trending long ago. This was something like, let me say, like, yeah, ah, many of you were not, I don't know if, how many of you were born then. No, this should be like, yeah, 2000, in the year 1990, like from that time, from that, let me say from like 1990 to like 2004. That was when that center was trending. From 1990 to 2004, 2005, that three-quarter hand senator was trending. Not the short hand, not the long hand, the three-quarter hand, the middle hand wear, senator wear. That was what was trending. There was a time there's something we call jumpe in Edo. We call it jumpe. When your child are not going to touch ground, go jump, right? Now, do you know that that time when we were growing up, if they saw that thing for you, you'll be saying that, you now old man, you cannot be doing this, you cannot be wearing this kind of senator at this your age. You will not find it interesting. But right now, almost every young guy has that particular that senator, right? Now it got to a point whereby the long hands was trending, right? There was also a time whereby this, I think it's called bucket art, was trending. Now, whenever something is trending, people are following the trend. Now, look, let me even use slang. There was a time whereby this slang was trending. You go explain, tire, you not get evidence. So once something starts trending, people will be following the trend. It's the same thing with the forex market. Now, the reason why I'm giving all of these examples is so that you can help you remember whenever you are on your own. There was a time whereby people were following the trend. You go explain, tire, you not get evidence, right? Somebody started it and everyone started following it. That is how even same with songs. There was a time Lao was trending. I'm not promoting the guy, but there was a time it was trending. You get, so people are following trends. Now, why are people following trends? That's because they want to be current. So the same thing with the forex market. If you want to make money from the forex market, you have to follow trends. Now, what are the trends you have to follow? You have to follow the uptrend or the downtrend. These are the two most important types of trends you have to follow: the uptrend and the downtrend. Now, why can't you trade in this market? Gold currently now, I don't know why people are trading gold. Those guys, they are gurus, but I'm not seeing anything on gold. Now, let me quickly say this here. You have to be very, very careful trading currency pairs this period. A lot of people will lose so much money. I'm not prophesying, I'm not a prophet of doom, I'm not prophesying wrongly, but this is the truth. December, January, you have to be very, very careful. I told myself that I'm not trading till next year, February. That all the money I want to make, that would have made all the money already. So December, January, I will not be trading. I will just be watching, be observing. Why? I lost money last year, December. I lost money last 2 years, December. And I don't want to make that same mistake this 2025. They say once beaten, twice shy. But this one was twice beaten, forever. So this market now is moving sideways. Now, how can you know a sideways market? You will know a sideways market when you see that the market is in a box. All of his movement, majority of his movement, more than 90% of his movement is inside a box. That's how you know a sideways market. Look at. That's how you know a sideways market. Look at. 90% of his move is inside the box. This is a sideways market. And whenever the market is moving sideways, you do not want to trade it. So whenever the market is moving sideways, you do not want to trade it. Right? So whenever the market is moving sideways, you cannot trade it. You will keep losing money that way. Now, you want to follow what is trending, what is moving. Now, what is moving is either this moving upward or a scenario whereby it is moving downward. So these are the two types of trends you should pay attention to: the uptrend and the downtrend. Now, I will come back to that stuff of what's it called? Directional bias plus skill level. I just want to explain this to you guys. Now, what now makes a trend? What now makes now okay now for you to say that for you to know a particular trend, I've already told you the types of trend you should pay attention to, right? Uptrend and downtrend. Now, for you to now know what is the current trend of the market, see, I want to give you guys a secret. I don't know if you are write it down. I don't know what you are doing, do it down. I want to give you a secret. I want to give you a secret. I want to drop a secret right now. This is what has been helping me. How do you now know the current direction of the market? Now you may ask, Black Jeff, if I come online, I say online, if I come on charts now, how would I know the current direction of the market? First thing first is you not go far. When you come online, simply go on your H1 time frame, because that's where you are doing most of your analysis. You don't have to go to daily. You don't have to go to monthly. Calm down. You don't have to go to daily. You don't have to go to monthly. You can do all of your analysis from H1 time frame, right? H1 time frame is an intermediate time frame. It is the middle of higher time frame and the middle of lower time frame. So it's an intermediate time frame. So you can see everything you want to see on H1 time frame. Now, what are you looking for on H1 time frame? Now, pay attention to this. I want to say now, you are looking for the direction that has more recent break of structures. Write it down. When you come on chart, how to know the direction to trade that you don't get confused is very simple. Once you come on chart, you are looking at the direction where you have more recent break of structures. That is, if you have something like this, for example, now, let me do this. This is called that. This is directional bias that is getting a lot of people confused. I don't know why this is getting people confused. This is very simple. This is directional bias. Then you now have something like this now. Look at now. We have one, two, three, four. Four break of structure in this downward direction. I'm going to explain many to you guys. Then we later have something like this. Yes. We have just two break of structure in this direction. We have two break of structure to the upside, and we have one, two, three. We have four break of structure to the downside. Now, what is the directional bias of this market? Can somebody answer me? You can unmute your mic and just say something. We have, based on what I just said now, we have four break of structure to the downside, and we have two break of structure to the upside. What is the overall directional bias of this market?
Uptrend.
What is it?
Uptrend. Uptrend.
Uptrend.
Uptrend.
All right. Is there any other is there any other what's it called? Um is there any other suggestion? Does anyone have anything to say again?
Downtrend, sir.
Downtrend. Okay. Is there anybody answering again?
Down, downtrend.
Downtrend. Okay. Some sides are saying uptrend, some sides are saying downtrend. Which one will I follow now? Let me give my own answer. The actual answer for this is this. Listen, the overall directional bias of this market, the overall directional bias of this market is a downtrend. But the recent directional bias of this market is an uptrend. I said, I will come again. I said the overall directional bias of this market is a downtrend. Why? Because we have more break of structure to the downside. But the recent directional bias, what do I mean by overall? That means in the long run, this market will tend to sell for long, later sell for long. But this, okay, now in the long run, it will sell, but for a short while, it will just buy. So this buy is just maybe a scalp or intraday. But in the long run, for weeks, months, it will be a sell. Do you guys understand? Please, if you understand, go on chat and type I get you, sir. If you understand, just go on just go on chat and type I understand, please. If you understand, just go on chat and type you understand, and I will continue. You don't understand? Okay. I need your response now. You guys, I'm teaching you guys. Please, I need your response. Hey, Sandra, the Pena. Pena. Go on chat and type you understand or you don't understand. So I would go down. All right. Let me explain again. Now, if I'll go on chat and explain on chat. Now, if you look at this guy now, if you look at this guy, we have more break of structure to the downside. More break of structure to the downside. We have more break of structure to the downside. If you look at this guy, we have more break of structure to the downside. And we just have two break of structure to the upside. I said that if you are looking for the recent direction of the market, it is an uptrend. I said that your directional bias is where you have the most recent, more recent break of structure. Now, if you look at now, this is the more recent, right? This is more recent. These are the recent break of structures. The recent break of structure is to the upside, but the previous break of structure is to the downside, and it has more. So I said that the overall direction of this market in the long run is that it will sell. But currently, what the market will just do currently, you can just buy for a scalp or for intraday trade. Let me go on chat and explain what I'm talking about. Let me go on chat and explain what I'm talking about. What has just been doing just a do do. Um Let's shift this guy to the side. Okay, let me use this for example now. Now look at the initial trend of this guy was a downtrend. How many break of shot does he have? One, two, right? Two break of structure to the downside. Then let's look at the break of structure to the upside. After this downside now, the market started moving to the upside. We have one, two, okay, this is two here, not two. This is two. This is two. And this is three. Alright, now let's use this guy now. This is what we are using. So for this guy now, we have two break of structure to the downside, and we have three break of structure to the upside. Now, in this case now, it is very simple. The directional bias of this market based on structure, I'm going to explain based on key level. The directional bias based on structure is this guy to the upside is an uptrend. The directional bias based on structure, based on market structure, is to the upside. So these two guys, so what I will be looking out for here, I'll be looking for more opportunities to buy than to sell. Are you guys following? I'll be looking for more opportunities to buy than to sell. Is that simple? I'll be looking for more opportunities to buy than to sell. I'll be looking for more opportunities to buy to the upside than selling. I will not even be looking for opportunities to sell. I'll just because I have more break of structure to the upside. So I'll be looking for more what's it called? More opportunities to buy to the upside. So that's what I'm having currently on this guy. Before we now have a new break of structure to the downside again. So that's basically what what's it called? Directional bias is talking about based on market structure. Now, let me now move to the side of market directional bias plus key level. I just explained what directional bias is. Directional bias is simply talking about what is the current direction of the market. And I just told you guys that to know the current direction of the market, which do you have what's it called? The recent break of structure. Which direction do you have the recent break of structure? That's how you know your directional bias. Now let's now combine it with key level. I've already explained key level in my previous video, right? Okay, let me go. Let me use synthetic indices. I think that would be better. Let's do synthetic indices. Let's do synthetic indices. Like this guy, for example, now we can see that this guy is moving downwards. Is in a downtrend. As before we break construction to the downside, right? Now I want to show you guys directional bias plus key level. I just showed you guys directional bias based on market structure. Now I want to now show you guys directional bias based on key level. I want to show you guys directional bias based on key level. I've explained this before in one of my YouTube video, but I want to go into details again. Now, directional bias based on key level. Directional bias is based on two, right? The one you guys know is based on what's it called? Market structure, which I just explained. Directional bias based on market structure. Now, this second one is directional bias based on key level. All right. Now, directional bias based on key level is this. I told you guys that if the market is moving in a particular trend, if the market is moving in a particular trend, let's say uptrend, for example, now, you do not start to trade the first key level that is formed. You start trading from the second key level. Reason being that you don't want to get trapped. You do not want to get trapped. Now, If you see that the market is moving sideways, that's not the best time to start looking for key level to enter with. You just lose money. Make sure the market is trending. It is from that trending, that's where they came up with directional bias from. The market must be trending, it must be moving upward or it must be moving downward. So now combining it with key level is simply finding what is the market doing. Now look at this market now. This market now has moved from this point here, let's see, to this point here. Let's assume from here now that no market, nothing has played out from here downward, right? Let's assume this was where this downtrend started from, right? We just have a break of structure here. Now look at now. The first key level is this guy here. This is the first key level. Let's do it now. Okay, let me use a box instead so you guys will see it. Let me zoom out. Let me use a box. We have this guy, this key level. We have this key level here. We've already seen that, okay, that this market has been moving downward. Now we now have this guy now, this guy, right? Want to check out this trade. Okay, we have this guy here. This is how you do your back testing, even trading key level. You have this guy and this guy forming key level here. That is, support becomes resistance because this guy break past the, what's it called, the equal points of the key level. Now, did this key level play out for a sell? Look at the market came and tapped into the zone and is selling off from there. This is an assurance that, okay, this market is we sell. This first guy, you are not going to take your trade from this first guy. All you just want to do is to observe and see if the market will sell. Now you start trading from the second. This is the second. This is the second. But the market did not tap into it. Look at, you now go to the next. Look at, after having this key level here, you start trading from this one. Look at, the market tapped into it and it sold off. It's that simple. This is how to trade directional bias plus key level. See, even the people that have been shouting directional bias, they will not explain the way I'm explaining it right now. What am I saying? I'm simply saying that once you see a key level being printed in a particular direction, do not be so quick to trade that direction. Go and check as a key level played out in line with that direction first, then you will take the next one. Let me break down my grammar. Before you take a key level, before you take a key level, you want to first of all do a test, a test, right? Back test, yeah. And you want to check as a key level played out in line with that direction you want to trade in. Let's say, for example, now this is the recent key level. Okay, let me say for a sell now, this was the most recent key level for a sell, which failed. This was the most recent key level for a sell. Let's assume for a sell, this was the last and the most recent key level for a sell. Okay, that wasn't the last. This was the last. Yes, this was the last key level for a sell. This was the last key level for a sell. I want to explain something to you guys. Now, this is the last key level for a sell. But based on blackjack, this is not correct. Oh, but some persons who want to take this trade, they'll be like, this is support become resistance. Me, I will not take this trade. I can never take this trade. None of my students can ever take this trade. Do you know why? It does not have a break of structure, so we cannot take this trade. But let's just assume, okay, let's assume this one is the most recent. Now look at something. Now let me quickly say something here. Because this particular guy does not have a break of structure, Doesn't mean you should come and be taking this one. Oh, no, it is wrong. This is the most recent key level. If he doesn't have a break or structure, wait for his failure and trade the opposite direction. Is that simple? This is the recent direction key level for a sell, but it is not a valid one. It is not a high probability sell key level. Wait for his failure and take the opposite direction, which is the inverse. Now let's assume this guy is not playing out, or this guy is not here. This is the key level we have for a sell. Let's assume this is the key level we have for a sell. I want to show you guys something now. This is the most recent sell key level. This is the most recent sell key level, for example. Now this is the most recent sell key level. Now in this recent sell key level, before you take this trade, you want to check, that is back test. You want to go to previous key levels based on this downtrend. Has any key level played out before? You just need one key level to play out to the downside. This is now directional key level. This is called directional bias plus key level. This is what Sapege has been shouting, and that's what a lot of people have been getting confused at. What do you mean by directional bias? What do you mean by directional bias? This is the directional bias and the key level she has been shouting. um Michael, Monday you asked me a question. How, excuse me sir, how can we know a valid key level and a key level that we hold? I've explained that on my YouTube channel. You can go and revisit the video on my YouTube channel. I explained that. Check out for key levels to take and key levels not to take. Check out for what to look out for before taking key level. I've explained that in those videos. So do you guys have any question based on what I'm just explaining now? This is the real meaning of what's it called, directional bias plus key level. You are finding out, you're not trading the first key level that is happening, you are trading from the second key level. This thing that I'm teaching you right now, I did not learn it from anybody. It's something that I learned myself based on backtesting or something. So this is the meaning of directional bias plus key level. I told you guys that there are two types of directional bias. We have directional bias based on market structure, which I showed you guys. We have directional bias based on key level, which I'm explaining to you now. Now, this directional bias based on key level is if you want to take a particular key level of a particular direction. Let's say this is the key level for a sell, for example. Now, you want to take this key level for a sell to the downside, right? You want to check, has there been any key level that has played out for a sell before? If no, do not take this one. If yes, you can take it. Let me find another example. This one is consolidating. I will leave this pair. All right, let me check V10. Is any key level played out here? And I've also taught you guys um single key level, overlapping key level. The video is also on YouTube. You can go check it out on YouTube, right? All right, this is a very good example. Let me zoom out. Now we have, look at now, look at something now. This is very beautiful. We have this guy. Look at the recent direction of this market based on key level, not based on market structure now. Based on key level is a downtrend. Is a downtrend. But based on market structure is still an uptrend.
Yeah, option.
Please, that person should mute his mic. The directional bias of this market based on market structure is an uptrend, but based on key level is a downtrend. All right. Let me explain what I mean by based on market structure and based on key level. Based on market structure, if you want to check out this pair, right, this is your inducements. This is your inducement. This is your inducement where the market will likely sell to before it will start buying, because based on market structure, it's still an uptrend. This is your inducement. Now, thank you, Jesus, for this example. This is your disruption. This is your disruption. Now, based on market structure, this market is an uptrend. Why is it an uptrend? We have more break of structure, valid break of structure to the upside. Look at break of structure to the upside, and the market has not come to this inducement to push up or come to disruption and push up. What will make this market to now change, to now be downtrend directional bias, is when the market breaks the disruption. I've explained this many times. Breaks the disruption and form a break of structure to the downside. Then you can say the market has changed direction to the downside. But with all things being equal like this, without coming down to break this disruption and forming a break of structure to the downside, it is still an uptrend. One. Two, if it breaks this disruption, you are waiting for it to come to this downtrend inducement or downtrend disruption and you sell. I've explained this on order flow. You can check my video on YouTube. I explain order flow. You can go watch a video on YouTube on order flow. Let me just quickly go straight to the point and finish this topic so I can rest. Imagine doing this thing for free. A lot of people are very funny. I will spend hours, almost 1 hour, teaching you guys something. You guys will not be profitable and be giving accolades or giving remark to somebody else just because you want recognition. My God will fight you. It is very bad. Oh. I will spend time teaching, breaking things down free of charge. You'll not go to let me not mention things, Jerry. So this is this guy. Now let me explain directional bias based on key level with what I just explained based on market structure. Now let me explain directional bias based on key level, right? We have something like this. Based on key level, we have something like this. This is the most recent key level for a downtrend here. Now, because this market is moving downward, doesn't mean its directional bias for a key level is downward. Remma, write it down. Because this market is moving downward, doesn't mean the directional bias based on key level is downward. Word, Remma. I come again. I said because this market is moving downward, though that doesn't mean that the directional bias of this market is downward, is downtrend, or it will sell. What do I mean? Now, this is the recent key level for a downtrend. Now, before you want to take this key level for a sell, you want to go up and check has any sell key level played out before. If none has played out before, you cannot take this new one. You should not be the first to take it. Are you there? So if none has played out before, you should not be first to take this one. This is how to save yourself from loss. Now, this is the most recent key level that is about to play out. Now, let's check. Has any key level played out before? Let's check. Was there a key level here? There was a key level here, but it wasn't really valid. Let's start from the top. Let's start from the top. There was a okay, no key level here, no key level here, no key level here, no key level played out here. Coming down, we have this key level here. Look at it. Nothing tap into it and sold. All right, let's move on. We have this. Okay. We have a key level here. Okay, we have this key level. Look at. Let's use this guy and this guy. Let me zoom out so you can see. Let's use this guy. I'm teaching directional bias based on key level now. We have this guy and this guy touching this body. It is a valid key level. Look at the market tap into it with this green body and it sold. That means a sell key level has played out. So this guy has 90% chance of playing out also. If this guy had not played out, if no key level has played out, I, Black Jeff, and his mentees would not take this one. Now, because a key level has played out for a sell, and this would likely be like the second one. Okay, not even the second one sef. I think another one played out here. Look at this guy. Yes, look at another one played out here again. First one played out. This is the second one. This is the second one. Look at that's tap into it and is selling again. And this is the third one. So this guy has high chance of playing out. This guy have high chance of playing out. Why? Because first key level played out, second key level played out. This is the meaning of directional bias plus key level. Directional bias key level. This is the meaning. I just broke down now. So this is the meaning of directional bias plus key level that I just broke down. Directional bias plus key level is simply a key level already playing out in a particular direction and the next one will play out. That is, a key level has played out first, another one has played out again. All you just want is for a key level to play out first in a particular direction. That's all you need. Now, let me now come back to this guy. Now, you see that the most recent key level here, initially was a sell key level. Look at this sell key level that failed. Let me show you guys something now. This is a sell key level that just failed. Look at that's taking out people's stop loss. Now, based on direction, now let's not talk about based on market structure now. Based on market structure, the directional bias is a sell. Now, based on key level, the directional bias of this key level, this was the last sell key level here. This is the last sell key level. But this guy failed. This sell guy has failed. Now, we're going to trade the inverse. This is the inverse. This is the inverse. Now, are we
Hello,
going
sir.
to please calm down? Just hold on. Are we going to
I can't see your chart.
what do you say?
I can't see your chart.
Is your network then? Please, can you guys see my chat? I'm on the reef. Can you guys see my chat? Is your network?
Yes, sir.
All right, thank you.
Yes, I
So,
see your chat.
all right, so this is now because a sell key level has failed, we will take the inverse for a buy. A sell key level has failed, we'll take inverse for a buy. Now, this is the first key level for a buy. Are we going to take this key level? No. We will just wait for it to play out on its own. right, push to the upside, then if this guy has play out like this, now I now know that the directional bias based on key level of this guy is now an uptrend, of V25 is now an uptrend. So my next key level would now be this for a buy. I'll be anticipating this is now the one I will now take and buy. This first one is to confirm my direction. The second one is the one I am taking. That would be all for tonight's class. I remain your host, right? I remain one of the best forex mentor, one of the best forex tutor, one of the best forex trader, right? This country has produced. And I offer a mentorship program, right? A one-on-one mentorship program for $300. It should just be you and I in the class. I'm going to teach you forex from basics to profitability, everything you need to know from basics to profitability. I offer a one-on-one mentorship, just you and I. This is not crowd. You have access to ask me questions, as many questions as you want. See, mentorship is every day. Like the mentorship is every single day. You have access to me every single day, any time of the day. I'm there. Only when I'm busy, I will not respond to your message on time. But at my leisure time, I will respond to your message, give you feedback, explain, break things down for you. It's a one-on-one mentorship. I charge $300 for that. Then I also have another what's it called? Kind of mentorship, which is a private mentorship. Now, this private mentorship is for $600. Why is it $600? It involves what I just explained now, this one-on-one mentorship, right? And everyday live session with me. That is, you get to have a live session with me every single day. That is, whenever I want to trade, whenever I want to take a trade, you're going to get to see how I am analyzing the trade from start to finish live before I execute. Or if I execute a trade based on time difference, wherever the country you are in, or maybe you're at work, if I execute a trade, I'm going to call you by the end of the day and tell you, okay, I took this trade, I had a profit, or I made profit from this trade, or I had loss from this trade, and this is what happened. This is how I analyze the trade and all of that. That is for $600. So that for the $300 package, the classes are just twice in a week. While that for the $600 package, the classes can be every single day. And we'll be having live analysis. So that's that for tonight's session. So I'm going to take just I'm going to take just um 3 questions, then I call it a night. Just 3 questions. I call it a night. Just 3 questions. Ask me 3 questions based on what I've taught tonight, and I will call it a night. Who is starting? If there's no question, we can call it a night, and that will be all. I will upload the video on YouTube. You can watch the video on YouTube. Who is asking questions? All right. Nobody's asking questions. I believe you all understood what I
I have a
just
question.
taught.
I have a question, sir.
All right, sir.
I want to ask, thank you for all you do. I really appreciate. I want to ask, when when the market hasn't changed structure, maybe the market is actually a bullish market overall, but however we are
Please,
seeing
can you please speak out, please?
uh,
Please speak out.
is on Bluetooth. Let me take question. I said, let's, for instance, maybe the market is heavily bullish overall, but however, we are experiencing a temporary bearish market structure. Now, when the market and you want to engage the market using directional bias and key levels, however, the market is still bullish, but we are seeing a bearish structure temporarily. Now, when the market is showing that bearish structure temporarily and you are spotting out the key levels within that same bearish market structure, and the market must have touched down the last, maybe let me just say, the last inducement of the bullish market structure. Market is at the spot where uh, I don't know if you are getting me, but let me just take
Wait,
my time.
just hold on, just hold
Market
on, just
is
hold on,
bullish.
just hold on, just hold on. Like this place, for
Okay.
example, now. Like this place, for example, now.
Mm.
This is what they call inducement and disruption. This is my
Okay.
inducement for this guy now. This is my inducement for this guy. This is my inducement for this guy, right?
Mm.
This is my inducement for this guy, and this is my disruption. Now, I've already explained it one of some of the first videos I've uploaded on YouTube that your inducement and your disruptions are high liquidity points where the market can likely reverse from. Now, if this guy is buying from this point here, if this guy is buying, which is already doing, this guy is buying from this point here, I want to buy to this point of inducement or this point of disruption and sell long term. That's why I said this buy is a temporary buy, is a short buy, but the overall is a long sell. Same thing for this guy here that I analyzed here. Was it this guy? What pair was that again? Okay, yes, this pair here. This pair. This case now, if this guy happen to sell from here, this guy happen to sell from here, if you happen to sell from here, I want to either sell to my inducement or to my disruption, then take a long buy and hold. This is the time to even buy and hold this December period. Not even distress yourself. Let the market just come to this your disruption. Please mute your mic. Let the market just come to this your disruption and you take a long buy. TP is up here. So that is it. So this key level, directional bias key level, this one now is a short term stuff. But the directional bias based on market structure is a long term. That's this for this guy. Have I answered your question, sir?
Correct, correct, correct.
All right, sir. Any other question? One more question, I will call it a night. Just one more question, we'll call it a night.
Please, are
Mr.
you going to
Emmanuel,
upload this on your YouTube channel?
yes, it will be uploaded on YouTube channel. Maybe
Okay,
tomorrow,
thank
before tomorrow evening,
you.
yes. Mr. Emmanuel, you're asking for the premium and the discounts. Ah, okay. Let me just quickly,
So,
this will be the last thing I will talk about before I call it a night. I'm also supposed to talk about this, but let me just do this and
thank you,
call it
sir.
nice. No problem, sir. Now, for the premium and discount based on key level, now you want to check that key level, that place you are taking key level, that place you are taking key level, where is the recent break of structure in that place you are taking your key level. If you look at now, in this where we have this key level here, the recent break of structure is this. This is the recent break of structure. In this point we are taking key level. This is the recent break of structure, right? Now, I'm going to explain premium and discount now. This is the most recent break of structure in this place here of our key level. This is the most recent break of structure in this place here of our key level. All right. Now, you also want to check that where your key level is it a premium or is it a discount? You want to check, you want to put a tool, Fibonacci tool on it and mark 50, let's say it got here now, and mark 50% of it. This is the highest point that's gotten to now. Look at, if it is on 50% below is on discount. If it is on 50% above, is on premium. Like this guy now, if you look at my 50% now, is on 50%. The key level is above 50%. That means is on premium. And it is high probability setup. Why? Because it is on premium. But if the key level was on discount, that is, this key level now was below here, it would have been, it would be risky. But this key level now is on premium. So it is high probability setup. You can sell and risk good money for it. Combined with the fact that it has played out before direction, you have what's it called? Um, your key level being on premium, and what's it called? You get confirmation candle, you take a sell, you should make money from it. 90% this guy will sell because everything is intact. Do you understand, sir? I just explained something of 5 minutes, but if you go on YouTube, I
Yes, sir. Thanks so
spend
much, sir.
time to explain it.
Yes, I understand, sir. Thank you so much, sir.
All right, so that will be all for tonight. See you all when I see you guys. Maybe this same time, maybe next week Sunday, maybe if I am led, I will teach you guys. But that will be all for tonight. Bye for now. You can reach out to me on WhatsApp, you can reach out to me on Telegram, but I do not answer questions of what I teach here. I reserve that for my mentees. These guys paid me money to teach them, and I'm teaching you guys for free. So I'm just giving them, my mentees, mentorship. I'm doing my teachings free of charge. I'm teaching free of charge. I don't have knowledge, but mentorship, you have to pay me to mentor you, or pay me to teach and mentor you. Yep. So that will be all for now. Good night. Black Jeff loves you all
Sir,
and wants to see you all
sir,
profitable.
sir, sir. Can you please drop your WhatsApp number where can we get it?
All right, my WhatsApp number, let me just call it right now. My WhatsApp number is +234.
Okay,
I'll write it down very
okay,
fast. +234
okay.
eight
Yes,
zero
0
six zero
60
five three
53
one seven
17
7 1.
71.
That's my WhatsApp number. +234 80 60 53 1771.
71.
All right, that's all for now. Bye and
Thank you,
see
sir.
you guys.